it's dangerous. And Occidental had one come in, I think, in 19,000 barrels or something like that, one day. And in a year and a half, it becomes practically nothing. When did you buy that royalty in your Bakersfield or wherever it is?
Well, they still pay me $70,000 a year.
What'd you pay for the?
$1,000.
Yeah. Now that's the opposite of the Permian. Okay, Becky.
This is a question from Monroe Richardson. The Wall Street Journal reported in March that oil producers are producing less oil and may have reached their peak in the Permian Basin. Given the major positions of both Occidental Petroleum and Chevron in the Permian, would you please explain the rationale for Berkshire's significant holdings of both those companies, considering that future outlook for oil there?
Well, there's no question. It's really interesting about oil, and Charlie knows way more about oil than I do. When did you buy that royalty in your Bakersfield or wherever it is? But that was before I met you, right?
Yes. No, it wasn't before. Yes, it was. It was just before. You're right.
Yeah.
And that goddamn royalty still paying me $70,000 a year.
What'd you pay for the?
$1,000.
Yeah. Now that's the opposite of the Permian. My dad bought $1,000 or $1,500 worth of royalties before he died in 1964. He left them to my mother. My mother left them to her two daughters, and my older sister died, and my younger sister's here today, and she gets these checks every month, and she knows about all these different fields and what they're producing, and that's the reality of half of the oil production or something around that in the United States, and then the other half is shale. And you know, if you've gone to the movies and ever watched oil, you've never watched the things that are pumping out Charlie's royalties in California. You see these gushers of oil. Well, in the Permian, this should sink in on you. And the first day when you bring in a well, you know, it may be 12,000 barrels, it may be 15,000 barrels, and it's dangerous. Occidental had one come in, I think, in 19,000 barrels or something like that, one day. And in a year and a half, it becomes practically nothing. It's a different business, in effect. And the United States, it's interesting, we use maybe 11 and a fraction, well, we produce 11 and a fraction million barrels of oil equivalent a day. But if shale stopped, I mean, it would drop to 6 million very fast. Well, just imagine taking 5 million barrels a day out of the production in the world, and then we're also taking down our strategic petroleum reserve. Strategic petroleum reserve is the ultimate oil field. You don't have to drill. It's just that we've got it, and it was supposed to be strategic, but it gets involved in politics, and so when you talk about the oil business, you're talking about different kinds of businesses, basically, and we like Occidental's position in the Permian, and we wouldn't like that position. Well, it got to minus one day. It got to minus $30 a barrel. That was crazy, of course. But if oil sells at X, you know, you do very well, and if it sells at half of X, you know, your costs are the same, and it doesn't change the production, and it doesn't work as well. But it also brings down the oil production of the United States very fast. So we don't know what oil prices will be, but we do very much like the Occidental position they have, and that's why we financed them a few years ago, and it looked like it was a terrible mistake when the oil market just totally collapsed, and then it changed around, and we bought a lot of the common stock. In the last few months, they've reduced our preferred, which we don't like, obviously. I mean, we'd be disappointed in them if they didn't reduce it. It's intelligent from their standpoint. So we've taken, of the $10 billion preferred, we've gotten maybe $400 or $500 million of it retired at 110% of par. But Vicky Holub She's an extraordinary manager of Occidental. Her first job was with city service. That was the first stock I bought in 1942. She knows what happens beneath the surface. I know the math of it, but I wouldn't have the faintest idea what to do if I was in an oil field. I mean, I can dig 2 feet down. I can't in my backyard, and that's my understanding of subsoil in the world. I can't picture the field that Charlie has been collecting that monthly check from 50 plus years, 60, 60 years roughly. Or my sister getting at various fields where they just keep pumping and pumping and pumping. And we in the United States are lucky to have the ability to produce the kind of oil we've got from shale, but it is not a long-term source like you might think by watching movies about oil or something of the sort. Charlie, do you have anything?
Yeah, it really dies fast, those shale wells. If you like quick death in your oil wells, we have them for you.
No. But Occidental, they're doing a lot of good things.
Yeah, they drill a lot of new wells, and they're doing it at a profit, but it's a different kind of oil business.
It's just different, yeah. And that's true of almost half the oil produced in the United States. And there's
a
times
lot of oil down there that nobody knows how to produce. And they've been working at it for like 50 years. But they worked at the existing shale production for about 50 years before they figured it out. And it was weirdly complicated when they finally were able to do it. There's only one type of sand that works.
Can you imagine a horizontal pipe, that maybe 1.5 miles or something? It's just so different than what you think about.
It goes laterally for 3 miles, 2 miles down.
Yeah.
How in the hell do you drill 2 or 3 miles laterally when you're already 2 or 3 miles under the earth? They've mastered a lot of very tricky technology to be able to get any oil out of these wells at all.
Yeah. And we love the position with Occidental, and we love having Vicky run it, and they've been.
And there's a lot more oil down there if anybody can figure out another magic trick. That's all we need is another magic trick.
But Occidental has some other things too.
Yes,
but the price of oil still is incredibly important in terms of the economics of short-lived oil. I mean, no question about that. And,
well, if it's...
And we will, incidentally, there's speculation about us buying control. We're not going to buy control. We don't want to. We've got the right management running it. I mean, we wouldn't know what to do with it. Charlie wouldn't mind knowing what to do in an oil field.
Admitting you're buying coal would be like going out and seeking to acquire a cancer or something. You can't even borrow to expand a coal mine now. It's really, it got very unfashionable.
Yeah. And we think, frankly, some of the things that are ridiculous, and on both sides, in both extremes. I mean, you're dealing with physics. You're dealing with, it's the politicization of positions on something that's enormously important in terms of energy. Is just it just lends itself to demagogues and fundraisers and advisory organizations and everybody in sight. And we will make rational decisions, and we do not think it's un-American to be producing oil.
And there is no oil basin in the United States that compares to the Permian in terms of promise.
Yeah, we were lucky.
Well,
we didn't know it was there until not that many years ago.
It had sort of been used up, and they always knew the shale oil was there, but they thought it was going to stay unrecoverable forever.
Yeah. The second or third stock I bought was Texas Pacific Land Trust, and they owned 3 million acres down there, and fee, and they were grazing revenues of 10,000 a year or something like that. And they were sitting on this incredible amount of oil, and basically that company is now actually part of Chevron, and it went through Texaco and did all kinds of things, and there's still a Texas Pacific Land Trust, but a lot of that property is fee owned by their minerals are owned by Chevron, which is some advantage, but it's an interesting subject, I'll put it that way, and we will not be making any offer for control of Occidental, but we love the shares we have, and we may or may not own more in the future, but we certainly have warrants on which we got as part of the original deal on a very substantial amount of stock at around $59 a share, and those warrants last a long time, and I'm glad we have them.
I want to pivot to a question from Frank Wang in Houston, Texas. This is a question about Berkshire. He said, Berkshire previously took a position in Exxon and then exited fairly quickly. If I recall correctly, he says, I believe you had stated that Berkshire thought it was a good alternative to cash at the time. Is the same type of thinking with Berkshire's new position in Occidental and Chevron? Is it the same type of thinking, or is it likely to be more of a long-term type of holding for Berkshire going forward?
Well, that is a very good question. And I think having a big position in the Permian Basin through those two companies is likely to be a pretty good long-term hold. So I like that aspect of that position. And Ben Graham used to say, if it's a good investment, it may be a good speculation. And I think that's generally true, but I don't do those short-term speculations, at least not very often. But I like the big position that Berkshire has in the Permian through those two. I kind of admire both places a lot. Both Occidental and Chevron are very admirable places. And by the way, Oxy didn't start like that. Yeah. If you go back 30 or 40 years, Oxy was owned by a crook. And it's evolved into a wonderful place, but it started as a sleazebag.
Who was running it 30 or 40 years ago?
A man named Armand Hammer.
Oh.
Before your time, Becky, you're too young.
I know, Army Hammer, the younger one.
Yeah.
Yeah.
Anyway.
The degree to which the market got dominated by that is shown on a slide. Oxy won. If you'll put up the Oxy won, that shows how we bought what became. Well, we bought in 2 weeks, thereabouts, 14% of Occidental Petroleum. And you'll say, well, how can you buy 14% of a company in 2 weeks? And it's more extreme than that. Because if you look at the Occidental proxy, you'll see that the standard names, BlackRock, index funds, State Street index funds, basically, Vanguard index funds, and then one other firm, Dodge & Cox. If you take those four entities, and they're not going to buy and sell stock. They've got their own little rules. So they own 40% of the company, roughly. Those four firms, and they didn't do anything during this period. So now you're down to 60% of the Occidental Petroleum Company that's even available for sale. Now, Occidental's been around for years and years and years, big company and all kinds of things. And with 60% of the stock outstanding, I go in and tell Mark Millard, this fellow that is 30 feet away from Mearsal, and I say in the morning to him, buy 20% and take blocks or whatever it may be. And in 2 weeks, he buys 14% out of 60%. That's not investment. I mean, you're not buying from investment. I find it just incredible. You wouldn't be able to do that with Berkshire. I mean, you can't literally buy it. You can say you want to buy 14% of the company. It's just going to take you a long, long time. But overwhelmingly, large companies in America, well, all of them, they became poker chips, and people were buying and selling like 3-day calls or 2-day calls, and the more times people pull the handle on the machine, the more money the machine makes. I mean, it's very clear. And overwhelmingly, I mean, where did people go? The investors just were sitting around, and there weren't very many, and the money was being made essentially by a bunch of people gambling on things, and that enabled us in a 2-week period to buy 14% of a business that's been around for decades. And imagine trying to buy 14% of the farms in 2 weeks in this country, or 14% of the apartment houses, or 14% of the auto dealerships, or just anything, when already 40% were locked up some other place. It defies anything that Charlie and I have seen, and we've seen a lot, but I've never seen that percentage of the American public. Essentially, it was a gambling parlor, and the people that were making money were people that worked with gamblers. And then it declined very significantly a few weeks ago. You can feel it if you're around it. So when somebody asks a very good question, is why weren't you doing anything on February 20th, and why were you doing it on starting, well, in the case of Occidental, on February 28th? It's because things developed in a way, and in the case of Occidental specifically, they'd had an analyst presentation of some, I don't know whether it was a quarterly one or what it was exactly, but I read it over a weekend, and that was the weekend when the annual report came out. I read it over a weekend, and what Vicki Hollop was saying made nothing but sense, and I decided that it was a good place to put Berkshire's money. And then I found out in the ensuing 2 weeks, it was there in black and white. There was nothing mysterious about it, but Vicki was saying what the company had gone through and where it was now and what they plan to do with the money, and she'll do what she says. She doesn't know the price of oil next year. Nobody does, but we decided it made sense, and 2 weeks later we had 14% of the company, and we also already had a preferred stock and warrants. And the story of the preferred stock is we paid $10 billion. Preferred stock and warrants, we paid $10 billion for it. And at the end of the March quarter of 2020, we valued that $10 billion for our 10Q. We valued it at $5.5 billion. So we had a $4.5 billion loss, and it would have the world changed. Oil sold for minus $37 a barrel one day, and now it's quite apparent, I think, that we're very happy. We should be very happy that we can produce 11 million barrels a day or something of the sort in the United States, rather than being able to produce none and having to find 11 million barrels a day somewhere else in the world to take care of keeping the American industrial machine working. Charlie, have you got any comments on that as to how something this crazy could have happened?
Well, it happened. It's almost a mania of speculation that we now have. We have computers with algorithms trading against other computers. We got people who know nothing about stocks being advised by stockbrokers who No, even less.
I understand the commissions, though.
It's just an incredible, crazy situation. And it's weird that we ever got a system where all this equivalent of casino activity is all mixed up with a lot of legitimate long-term investment. I don't think any wise country would have wanted this outcome. Why would you want your country's stocks to trade on a casino basis to people who are just like the people who play craps and roulette in the casino? I think it's crazy, but it happened, and it's respectable. Not with me, but with
Yeah. Well, and look at what the country. I mean, they formed the New York Stock Exchange in 1792 under a buttonwood tree, and it really didn't seem like that was the eureka moment in America. But just look at what's happened using the system for less than, 3 of my lifetimes. I mean, it's unbelievable. So it's worked. Now, maybe it's worked in spite of itself, maybe with the country, but one way or another, America has worked in an incredible manner. Nobody could have dreamt it. Nobody. They'd have hauled you away if you said, in 3 lifetimes, that this place where we're meeting. I mean, it became a state in 1867, but 1789, it asked Ben Franklin or somebody that was walking out of the Constitutional Convention, what do you think the prospects are for Nebraska? It's unbelievable what's been accomplished, and it's been accomplished. The people who encourage the gambling, they would like to say it's been accomplished because of we've got these liquid markets and all these wonderful things. Charlie would probably say it's in spite of that.
It's a bet on oil prices over the long term more than anything else. It's also a bet on the fact that the Permian Basin is what it's cracked up to be and all of that sort of thing.
Well, Charlie's the expert on oil. Only compared to me.
Samuel Johnson said it's hard to determine the order of precedency between a louse and a flea.
If it's such a great deal and the Permian Basin is such a great deal, why didn't you just buy Anadarko?
Nobody asked us to.
Yeah.
Warren, there was other news that crossed the wires just last night in another deal that you're involved in. That would be backing up Occidental and its bid to try and take over Anadarko, which is also engaged in talks with Chevron, who's also got a bid out there. Last night, Occidental put out its own statement and said that it's going to be revising its proposal. It's now talking about a deal, still $76 a share offer, but 78% cash and 22% stock. By increasing that cash portion, it allows what they call significant immediate value, greater closing certainty, enhanced accretion, because with this, they no longer have to ask their shareholders for permission on this. What are your thoughts about where the deal stands and what this latest update says?
Yeah, I got a call yesterday after evening. First time I talked to Occidental, actually since a week ago yesterday, Sunday. And they told me that they were going in this direction, which I like, but I have nothing to do with it. I mean, we committed $10 billion, and it had nothing to do with how they frame their offer, how much they offered, or anything else. That all they knew was that they were sure they could get $10 billion from us if they complete the deal with Anadarko.
Is this deal a bet on the Permian Basin and on oil prices, or is this just a bet on, hey, it's great to have an 8% preferred?
Well, it's great to have an 8% preferred if there isn't any oil there. It's a bet on oil prices over the long term more than anything else. It's also a bet on the fact that the Permian Basin is what it's cracked up to be and all of that sort of thing. But oil prices will determine whether almost any oil stock is a good investment over time, whether it's Exxon or some wildcat driller. I mean, if oil goes way down, you don't solve that by hardly anything. And if it goes way up, you make a lot of money. And it's not what it does next week or next month or next year. You're buying reserves that go far out into the future. So you have to have a view on oil over time. And Charlie and I have got some views on that, not too specific because they're not that well informed, but they are. We feel good about doing the financing.
Why don't you just buy it yourself? It's only a $35 billion deal, and you've got $110 billion in cash sitting around.
Well, that might have happened if Anadarko had come to us, but we wouldn't jump into some other deal that we just heard about through somebody coming to us and seeking financing. We wouldn't. No, we hope people come to us on businesses, but I had no idea that this transaction was going to happen. I mean, a week ago Friday when I got the call from Brian Moynihan, I'd read in the paper about the deal, but I've never had any contact with Anadarko of any sort.
David Faber reported last week that you had said you would offer up to $20 billion, double the $10 billion that you did do on this deal. Is that the case?
If they needed it. But I think they have an arrangement, obviously, with the Bank of America, who called us. I don't know anything about that deal. I just know that the B of A has arranged that debt financing. If there were a different sort of thing. But what I meant to some extent with that is I'd be also very happy if somebody calls tomorrow and needs $20 billion. Occidental just needed the $10 billion.
Well, Charlie's the expert on oil.
Well, I bet.
Only compared to me.
Samuel Johnson said it's hard to determine the order of precedency between a louse and a flea. It's hard to tell which of us is more incompetent in oil.
Yeah, we're still competing.
I have a different view on this subject. I like having big reserves of oil. If I were running the benevolent despot of the United States, I would just leave most of the oil we have here, and I'd pay whatever the Arabs charge for their oil, and I'd pay it cheerfully and conserve my own. I think it's going to be very precious stuff over the next 200 years. And nobody else has my view, so it doesn't bother me. I just think they're all wrong.
Yeah. Well,
but at any rate, that is not the normal view.
and we've been pretty flexible in our own view. I mean, actually, the federal government is serving up however many billion barrels of the stuff that into the economy. And it wasn't that long ago that the idea that anybody produced a barrel of oil was somehow something terrible. I mean, just try doing without 11 million barrels a day and see what happens tomorrow. It is something that everybody has a feeling on immediately, and this gets into a whole bunch of different tribes of sorts, and you offend an awful lot of people if you talk in any way about it. But in the end, I think at the moment at least, most people feel that it's nice to have some oil in this country than not have it, and we're using a lot of it. And if we were to try and change over in 3 years or 5 years, nobody knows what would happen, but the odds that it would work well are extremely low, it seems to me. Charlie, why don't you say something more dramatic so you'll be the one that offended the most people?
Well, if you stop to think about it, the oil industry is being so vilified now. I can hardly think of a more useful industry, and I don't know about wildcatters, but certainly the petroleum engineers I know, and the people who design our oil refineries and pipelines are some of the finest and most reliable people I know. And I see very little trouble with the oil supply thing in the United States. So I'm basically in love with Standard Oil. And I don't have this feeling that it's an evil, crazy place. I wish the rest of the world worked as well as our big oil companies.
Let's talk about a deal you did recently, Occidental.
Right.
Where you agreed to back them up. You cut that deal and then you called Charlie, but you knew what he was thinking already?
I didn't want to wake him up. He's on Pacific Coast time. I thought it'd be very unfair if I brought him.
Warren knew I'd be for that deal.
Sure, I knew it.
How did you know that? How do you know so much about each other and how you think?
Well, Occidental's in my part of the world, and of course I've followed to some extent the developments that are interesting.
And what do you think of the Occidental deal? Why do you like it?
I like it.
Why?
I think it's got potential.
Because?
Well, because I think that Occidental is right to want to do it.
To buy into the Permian Basin, to get more assets there.
Absolutely.
And what is it about the Permian Basin that you like?
It's got a lot of oil in it and gas. I don't like a desert just for its own sake.
I asked Warren this earlier today. If it's such a great deal and the Permian Basin is such a great deal, why didn't you just buy Anadarko?
Nobody asked us to.
Yeah, we have no opinion on commodities. East Texas oil sold for $0.10 a barrel in 1932. We really don't know. We haven't the faintest idea what the long-term price of oil was.
Warren Buffett has said time and again that he has no idea of future oil prices or commodities, yet he invested heavily in oil. Is there a contradiction in this? If not, what are his reasons for investing in oil? Please watch until the end to find out and subscribe if you like this video.
And my question is that, first of all, speaking about the Berkshire's portfolio, there's an increasing exposure of your investments towards commodities. My name is Ari Jaja. I'm a junior from Brewer College, New York City, and to coal and agriculture through the oil stocks that you recently purchased. So my question is that, what is your long-term view on commodities, and how does it impact your view on the geopolitical state of the world in the future? Thank you.
Yeah, and to my knowledge, Charlie will hear from him, but we have no opinion on commodities. If we're in an oil stock, it's because we think it offers a lot of value at this price, but it does not mean that we think the price of oil is going up. If we thought oil was going up, we could buy oil futures, which we actually did once, but very seldom, very, very seldom would we have any opinion on what any given commodity would do. Owning POSCO, we just think it's it is probably the best steel company in the world. Remarkable record. When we bought that stock, we were buying it at 4 or 5 times earnings with a debt-free balance sheet, one of the lowest cost producers around. I mean, it's a fabulous company. And in addition, it was a play on the Korean won, and we made 20% on the won by being invested through a won-denominated security. So we may occasionally be in those kind of businesses. We basically like best the businesses that require very little capital, because they're the only ones that have a chance of earning really high returns on capital. You can't have a business that has huge capital expenditures year after year and end up with a high return business. It just doesn't work in this world. But you can find some businesses that really require relatively minimal capital investment. Here's the case. This is a small one, but See's Candy is not going to require a huge capital investment. It requires some capital investment. But it's a wonderful business. It's a small business, but it's a wonderful business. And it's far better business relative to size, adjusted for size. It's a far better business than any steel business is going to be, or any oil business is going to be. It's just that it's not very big. We'd love to have it bigger, and we'll do our share in every way we can, as you may have noticed up here. But we do not have a bias toward businesses involved in commodities, and if we had any bias, it would be against. Charlie?
Yeah, we're going to be investors in businesses, not commodities by and large. And that has to work better over time.
Hi, Warren and Charlie. My name is Catherine Borud. I'm from Los Angeles, California. I invest primarily in commodities and commodity equities, I started out back in 2007 buying oil. In the summer of 2008, we reached the peak of the oil bubble. And that's when I reversed my holdings and started shorting oil. I made a nice profit. In 2009, I started buying oil again and oil equities, and I've been doing pretty well. But given the status of the world today and the price of oil, I'm questioning my investments. Is this another oil bubble? Has oil reached its peak? Should I keep my holdings? Should I short oil? Should I exit oil altogether and move into other commodities or other investments? So my question to you is, what are your sentiments regarding oil?
Well, I would say you've done a whole lot better than we have. So I think the crowd would rather hear from you. We actually did take a position in oil, I don't know how many years ago.
A long time ago.
Long time ago.
It was $10 a barrel.
And it wasn't that long ago, though, incidentally.
No,
I mean,
I know.
that was in the 1990s, although we've seen oil a lot cheaper than that. And East Texas oil sold for $0.10 a barrel in 1932. We really don't know. I mean, obviously, you're dealing with a finite resource. I don't know whether the world's up to 88 million barrels, or it was down around 85 million barrels, but there's got to be some comeback. So I wouldn't be surprised the current figure's getting pretty close to 88 million barrels a day. That's a lot of oil to take out of the ground every day. And of course, there are new frontiers have been found, but you've stuck a lot of straws into the earth, and it is a finite number. So the one thing I can almost promise you, is that oil will sell for a lot more someday. Interestingly enough, how many producing oil wells do you think there are in the United States? Well, the answer is something like 500,000. Now, there's these stripper wells. There's wells out near Charlie that have been going for 100 years.
Yeah.
But we have looked in a lot of places now. And what's happening, of course, from the standpoint of the United States companies, is that the smaller countries where oil is being found now are quite a bit smarter about how they grant their concessions than people were 50 or 75 or 100 years ago, so that they drive much more intelligent deals than was originally the case when we went exploring around the world. But I have no idea. We traditionally, BNSF had hedged a certain amount of oil, and because they obviously use huge quantities of diesel. And I suggested to them, although how they run the BNSF is up to them, but I really didn't think we could guess the price of oil. And I thought if we could guess the price of oil, we didn't need to run the railroad. I mean, it took a lot of effort, time to run that railroad. And if we knew how to make money just sitting in a room trading oil, why not do that instead? So we don't hedge. Well, in terms of Berkshire's parent company policies, we don't hedge anything in the way of commodities. Some of our subsidiaries do, and that's fine. They're responsible for their businesses. But there are very, very few commodities that I've ever thought I would know the direction of their movement in the next 6 months or a year. The one thing I'm quite convinced of, as we talked about this morning, is the fact the dollar will become less valuable over time, so that the dollar price of most things will go up, and maybe go up very substantially. Whether they go up enough so that you have the same amount of purchasing power after you pay tax on your nominal gains is another question. I really think that an intelligent person can make more money over time thinking about productive assets, rather than speculating in commodities or when, for that matter, fixed dollar investments. But that's maybe my own bias. Charlie?
Well, if we'd done nothing but oil from the very beginning, I am confident that we would not have done nearly as well as we have. To me, that's perfectly obvious. So I think what we've done is much easier than what you're trying to do.
And we like easy.
Yeah, we're not trying to make it any more difficult than we have to.
I really don't know any way to have an edge in that sort of activity. I mean, if you are going to try and figure out when to be long or short oil or natural gas or copper or cotton or whatever, I don't know of people who I feel would have an edge in trying to do that over the next 10 years, but I do know people where I think they'd have a very significant edge in investing in common stocks and maybe distressed bonds for that matter too.
Yeah, trading oil worked best of all for the people who bribed Nigeria. That's not our milieu.
Well, that's an insight I hadn't heard before. Cliff?
Over the past year, we've learned, perhaps I've learned, that Berkshire's results are more influenced by oil markets than I previously appreciated. Revenues at the railway company and some of Berkshire's manufacturing businesses were negatively impacted, and arguably low gas prices hurt GEICO's loss ratio. Yet during this year, Berkshire invested in Phillips 66, Kinder Morgan, and even PCP has revenues associated with the oil and gas industries. Now, I know Berkshire wouldn't make a bet on a commodity like oil, but is Berkshire making a statement about the long-term outlook for oil?
I'm making a statement about what?
Oil.
The price of oil?
Yes.
No, we haven't the faintest idea what the long-term price of oil was, and there's always a better system available. You can buy oil, as you know, for delivery a year from now or 2 years from now or 3 years from now. We actually did that once, Charlie, didn't we, some years back?
We cashed it in too soon, too.
Yeah, we made money, but we could have made a lot more money. But we don't think we can predict commodity. Two fellows who think we can predict the price of soybeans or corn or oil or anything else. So anything you have seen in our investment transactions, some of the securities you mentioned there were bought by Todd or Ted, and one was bought by me. But neither they nor I bought those, or if we sell them based on commodity price predictions. We don't know how to do it. And we're thinking about other things when we make those decisions. Charlie?
I'm even more ignorant than you are.
Well, that'd be hard to be. Okay. I think that's the first time I've heard him say that. It has a nice ring to it.